Hello everybody, today is May 3rd, 2023, and this is my experiment investing $1 a day in 10 different cryptocurrencies and $1 a day in 55 different dividend stocks. You see this dotted white line? You see how it's going up and then down. This is the start of the day. We can come over here and look at the 1 week period. We can see right here it's actually been trending in a downward state. We look at the 1 month period. We can see also right here it goes up, then it's mainly trending down. We look at the 3 month period, we can see right here, down and then up and then down again. We look at the year to date, we can see right here, I'm actually down $156. We can see that it's actually been trending, pretty much down in that particular sense. We can look at our cryptocurrencies right here. We can see that a lot of them are now in the red again. Bitcoin's doing pretty good. Ethereum's doing pretty good. But all the rest of them, are going down, and they've all been trending in a downward state. If we look at Bitcoin right here, because that's the leading trend, we look at the 5 year period. You can see it's actually quite up right now in the 28,000 compared to back when it was all the way over here in 16,000. People were saying to actually get in. It's mainly high because of inflation, and people are thinking it's a hedge against inflation. So that's why that's there. Now we have a bunch of other different cryptocurrencies that are doing. Bitcoin and Ethereum are the two main ones that do pretty well. Dogecoin is mainly just a meme coin, or just a hype coin in that sense. Same thing like Shib Inu. And you have a bunch of these other coins as well. I'm not investing anymore right now in AAVE. I'm not investing more right now any in Comp. So those two I'm eventually just planning to get rid of. I should have got rid of them when these were down to negative 50 cents and just took in the small amount of loss, but I don't see these going to be returning anytime soon, probably in the next like 5 years. So I'm still contemplating whether or not I want to keep them there or not, or sell them off at the loss that they're already at. Get a little bit of tax loss harvesting in that particular sense. And they have a bunch of these other particular Bitcoins that they're doing the way that they're doing. I'm just having them sit there and investing in them slowly, and we'll see what happens to them. Now these ones right here are my dividend stocks. Now if we look over here and look at VNO, Reality Trust, we look at the 5 year plan, you can see it's actually been trending in a downward state. Very, very down actually, way down from where it actually was before. It went a little bit up and then it's trending down. So this is more of my more risky one in a particular sense where it's a trust fund, it's a financial one. It still pays me dividends. So I'm still kind of, investing in it in that particular sense. Same thing like ABR. ABR is another reality trust, but it's actually been trending upward in that sense for the past 5 years. This one seems a little bit more stable in that sense because it started at a lower amount 5 years ago. It trended up a little bit, and as long as they're paying out my dividends, they also still have also a pretty good high yield dividend yield of 13.9% dividend yield right now. So it's doing not bad. We come over here and look at the next one. So GNL, Global Net Lease. GNL, Global Net Lease also pays me. And these ones right here, they're more of the risky ones in that particular sense. So the dividend yield is 14.5. So it's gone up because the stock has gone down in that particular sense. We can see right here, it's also trending in a downward state. So it might be not something that I want to keep going in. I may have to rebalance this particular finance ones in that sense, but we'll see what happens. Come over to the next one. We have BXB, Boston Properties. This is another financial one. We look at the 5 year plan. You can see also right here it went up, and now it's trending down. And the main reason it's trending down, it may be because all the different banks are crashing, all those different senses that are happening right now around the world. And they only pay me a 7.6 dividend yield. So this one may not be one that I want to keep investing in the future. We're just sitting here and we're going to watch. We're going to see what happens. It may be a good one. It may be a bad one. I don't know. But, I have my set it, forget it strategy, $1 a day, and just keep going. This one right here is a key bank. If you go around, drive around, you can see key banks all over the place, over in all the different sides of states. It was at $20 5 years ago, then it went up, and now it's it's down to $10. So it's half of what it was 5 years ago. So it's not doing amazing. It's not doing particularly really bad, but they've been around since 1958. They have an 8% dividend yield, and it's doing not bad as of right now. So I'm just gonna keep investing in it for right now. PRU, Prudential Financial. Prudential Financial is also another one that I'm investing in. You can see right here, its dividend yield is 5.8 as of currently right now today. and we look at the 5-year period, we can see it's actually kind of almost the same in that sense, just a little bit lower. So it goes down and then up, and then, but I'm expecting it all to keep going down. Like, if you're not prepared for what's happening this year, because the Fed has announced they're going to keep raising interest rates, I'm pretty sure that some type of recession is going to happen. A mild recession, they say. I'm pretty sure a large, huge recession is going to happen. And why do I think that? A lot of people are laid off. A lot of friends, a lot of places, a lot of companies, people I physically actually know are no longer have a job. And if you're watching this video and you don't have a job, my heart goes out to you. I'm sorry for you. I'm subject to the same things as everybody else. Just recently, my team, half the team, not CEOs, executives, and high-level managers and VPs, as well as many of my coworkers, half of them got laid off. And this is the third round that they've already done it again. And they're doing this, and now my work's completely insane because I'm inheriting all this different other work from all these other people. So that's kind of where it is, and that's also why I've taken a little bit break about posting. I'm only posting maybe every Wednesday, middle of the week. Makes it a little bit easier for me, as well as being able to get this content out and get it in a good plight where you can see stocks going up, stocks going down, and the middle of the week I think is a good place to actually start. The main reason why I'm going through each one of these is somebody commented last time they wanted to see each one of my different stocks and investments and go through them and have a little bit more explanation. So SPG, Simon Property Group, it's another financial one. Financials, as you can see right here, it's gone up, it go down, and I went over here and I showed the actual dividend yield, 6.292. HBAN, Huntington Bank. If you come over here, you can see it's actually up for the week, the 1 day. But we look at the 5-year period, you can see right here it's trending. It trends down, it trends up. It's mainly trending down because of what's happening right now in the world. So, banks have invested in treasury bonds, mortgage-backed rates, and then when they invest in those things, and then all of a sudden people are pulling their money out, things are not doing as well for a lot of banks, and banks are crashing. And more banks, more crashings, more layoffs. A lot more is coming this year. Don't be surprised by it. Just plan for it. And I plan for it. So the way I'm investing right now, I don't need this money. And some people are like, oh, you're only $1 a day. Why $1 a day? Well, $1 a day will help me get to eventually where I want to be. It's a small amount of my income that allows me to be able to, in the future, get paid my dividends. My dividend payments are still being paid out for me to go that way. So this is only a 5% dividend yield. This is PNC Financial. It's another financial investment that I'm doing. You can see the 5-year plan. It's not up or down, but from 5 years ago, it's kind of where it's at. I'm expecting it to go down further. There's a plan for it. A plan for these things to still keep going down. Equity Residential is another financial one in sense of residential. You can see it's actually up in that particular sense. I don't know how people have money to buy houses right now with interest rates and everything else so high, but maybe it's hyped up in that sense. It's at a 4% dividend yield. As long as it's paying my dividends, it doesn't matter what you choose. Just if you plan to invest for the long haul, start in something that you believe in. Now, all these financial ones, I'm going to admit that I didn't, plan for it in a sense for they're just high risk. As long as they're paying my dividend yield, and I plan for it based on my years and my months and how they're going to pay me out so that I can have a constant income each month is how I planned out my dividend stocks here. So FRT, Federal Reality Investment Trust, this one right here is a trust one. We come over here to financial, 5 years. You can see it's also in a downward state. Doesn't like the swiping with the mouse going up and down for that particular reason. But you come over here, you look at it's a 4.48% dividend yield. It's down from where it's at. These trust funds have been around for a good amount of time. So 1962, RF, Regions Financial, another financial one. You can see right here. It's doing not bad for 5 years. It's kind of been going in a trending up or down. It's all down right now. I'm expecting things to go down even more as the Fed is going to announce, most likely, I believe, they're going to raise interest rates. Maybe they'll stay the same. Maybe they won't. But I believe they're going to raise interest rates. UDR, UDR, which is another financial one. It's a real estate investment trust. This is only 3.88 dividend yield, lower dividend yield. Usually tends to be a little bit more on the safer side, and you can see right here because they're a little bit more safer. So that one's actually in upward state for the 5 years, doing a little bit better than those other ones. JPM, which is JP Morgan, one of the large, huge banks. If you probably have been watching news and stuff, it's been doing better in the last 5 years, and it's still doing better. Why? People are taking the money from the smaller banks and putting it in the bigger banks. But even though that's in the sense, doesn't mean that it's like a super the best or safest. I still invest in it anyways. 2.879% dividend yield for where it's at. 5-year plan. You can see it's. I think JP Morgan's gonna still be around. So this is one of my more the stable, more safer financial ones that I believe will still be here for the long haul. They've been around since 1968. And I still think they'll be around for longer. Now DVN, now we're going to energy and water. So DVN is the dividend energy, and forgive me if I'm pronouncing it wrong. We look at the 5-year plan, and you can see right here, they're up. Why are they up? Because energy is something that everybody needs. Gas, energy, water. These type of things are going to need during a recession. So I'm investing in these ones for that particular case. This is one of my more higher risk one. It's a 9.978% dividend yield. We come over here to EPD, Enterprise Products. Look at the 5-year plan. It's actually down, but it's not doing as bad as those financial ones. We come over here and we look at when they've been around, 1998, a little bit more risky, 7.392% dividend yield. And what exactly they are, there's Enterprise Products Partners, LP Corporation, a holding company which engages in products and trades of natural gases. I think natural gas is going to be something that people are going to need or maybe change to. We'll see what happens in that sense. Kinder Morgan, KMI. Look over here, look at the 5-year plan. They are up from where we were 5 years ago. And we look over here, and we can see right here that they are since 1997. And their dividend yield is 6.685. Kinder Morgan Incorporated engages in providing pipelines, transportation of natural gas services. And if you want to read the rest, you can read the rest, pause the video, and go through them if you like. That's why I'm scrolling through each one so you can see them. LYB is, I can't pronounce this one. Lindo Basil. I can't pronounce it. Some interesting name. This one's down, and well, up and down, and it's doing its thing. Everything's going to do its thing. I'm not worried about it. I have this long-term investment plan. They've been around only since 2007. They have a 5.177 dividend yield. The industries NV engages in refinery and production of plastic, resin, and other chemicals. Plastics, water bottles, everything. Plastic's going to be around. I still think plastic's going to be around for a long time. Not safe for the environment, but I'm doing it for the dividend yield in the sense of getting paid and constantly getting paid. Companies like this are going to exist. Maybe some controversy with plastics and other thing, but I'm pretty sure almost everybody in the world uses plastics nowadays, and it's not going away anytime soon. PNW, Pinnacle West, 5-year plan. You look at the Pinnacle West here, and you can see it's in a downward state as of right now, and everything I believe is going to be near downward state. Only a rare few companies will be in a different state. They've been around since 1985. Their dividend is 4.392. Pinnacle West Capital Corp is a holding company which engages in providing energy and energy-related products. It offers regulated retail and wholesale electricity businesses and related activities, such as electricity generation, transmission, and distribution through subsidiary Arizona Public Service Company. So we have Duke Energy. Come over here and look at the 5-year plan. You can see that they're up higher than where they were at before from 5 years ago. Duke Energy is another basically gas and utilities. They're at a 4.98% dividend yield, and they've been around since 1904. So that's a company that's definitely been through and seen different recessions, and they're still around. So that's one of my more safer ones that I invest in. I have a lot of risky ones. I'm doing more risky ones for growth ones because I'm older and I want the higher dividend yield to go with it right now. But I also have safe ones in each one of these categories to make sure that I still have some money left, even if I were to lose most of it, trying to be a little bit more safer. But even then, not every single stop is absolutely 100% safe. Anything can happen this year, next year, or the next 5 years, however things are going to play out. So PSX, Phillips 66. If you don't know what Phillips 66 is, basically a gas company. In that particular sense, they've been around since 1875, even older, and they've been around a lot longer, and they have a 4.18% dividend yield. Another more safer one in that sense. They've been around for a long time, up and down. That's okay. They've been around for a long time. I still think they're still going to be around for a lot longer, and I'm just going to keep investing in it. ETR, Entergy. 5-year plan, you can see right here, they are up, and they are up a lot from where they were 5 years ago. And you can see they're not bad at all. Entergy has been around since 1913. Another one of the more safer ones. A little bit lower on the dividend yield, 3.9, and we can see that it's not doing bad at all. So just keep investing, and that's what I'm doing. SO, which is Southern. Southern is another one of these companies with a 3.718 dividend yield. It's a holding company engaged in generating sale of electricity and energy and water in that sense. Look at the 5-year plan. You can see that they're way up, and they may keep going up in that particular sense. SO is not doing bad at all. We're just going to keep investing in it and see what happens. Chevron. If you don't know a Chevron gas station, you live in America, or I don't even know if other countries have Chevron, but I'm pretty sure they do. Chevron's been around since 1906, have a 3.6 dividend yield. It's a pretty well-known gas station and other type of things. So you can see right here, they're up, and they're going to probably keep going in that particular sense. Gas is not going to go away anytime soon. Almost everybody in the world uses gas in some shape or form, to some way, for their livelihood. ES, Eversource. You see right here, they are also an upward trend for 5 years. And we come over here, we look at what they are. We can see the engaged generation, transmission of distribution of natural gas and electricity. They've been around since 1966, and they have a 3.385 dividend yield. ED, Consolidated Edison. We come over here and look at the 5-year plan. 5-year plan that they've had. They can see we're trending in an upward state from 5 years ago. We'll come over here and look at Edison, Consolidated Edison. They've been around since 1823. A very, very long time. And their dividend yield is 3.226. And a lot of people are just saying to just hold it. Come over here, Hanesbrand. If you don't know Hanesbrand, Michael Jordan, the underwear company, clothes, socks, all those type of things. They're down. Why are they down? Well, they decided to cut their dividend and pay less dividend to reinvest in the company because, a lot of people are not buying commodities or other things right now. They're trying to save their money. They've been around since 1901. Their dividend yield is 12.22, but the main reason why is because they cut their dividend yield significantly so that they're paying almost, near pennies or nothing per each one of them. But I believe that they will eventually make their way back up. And if they don't, that's okay. More risky one, risking in a sense for products, but that's okay. We'll see what happens. Atria, MO. This is a cigarette company. I'm investing in Atria because it's MO, cigarettes. Cigarettes is going to be around. I don't believe cigarettes are going anywhere. It's not healthy for you. I don't smoke. I'm just investing in it because they've been around for a long time. I know lots of people that smoke everywhere, U.S., outside the world, everywhere. And, even though a cigarette company and tobacco has its uses. If you actually look at tobacco and you chew it and you put it on a bruise or something, it helps to get the bruise away. People use it in all different shapes and forms for smoking and for that particular sense. But it's one of those double-edged sword ones. But I'm doing it just to invest in it because a lot of other people see it as a company that's going to be around for a long time. And I see it's a company going to be around for a long time. So I'm investing it for its dividend yield. NWL, New World Brands. New World Brands. Look at the 5-year plan. 5-year plan. You can see right here it was up. Now it's actually in a downward trend. New World Brands. If we scroll over here and scroll down, they've been around since 1903. They have an 8.88 dividend yield. And they engage in manufacturing, marketing, and sales of consumer and commercial products. Camping World. Basically, if you like to go camping, outdoors type of things, you can see they're actually in a downward state where they were before 5 years ago. Come over here and you look at they've been around since 1966, and they have 11.457 dividend yield. One of the more risky ones, but I think it's going to be okay. It's not that risky. Been around since 1966. Higher dividend yield. So we'll see what happens on that one. We have Whirlpool, WHR. Look at the 5-year plan. You can see not doing bad at all. Still in the downward state, but not bad. They've been around since 1911. They have a dividend yield of 5.03, and they're a Whirlpool company. Basically, people that have refrigerators, freezers, cooking appliances, those type of things, and yeah, everybody's gonna need these things in some particular shape or form. If you don't, look at most people's houses and look at their counters, they have all different type of compliances in those particular sets. PM, Philip Morris, been around for not bad, 5 years in an upward trend in that particular sense. 5-year plan, we come over here and we look at Philip Morris International Company, engages in manufacturing of safe cigarettes and tobacco, nicotine and those type of things. They've been around since 1847, and they have a 5.22 dividend yield. We have Kraft Foods. I believe in Kraft Foods. This is one that I do believe in because I always eat Kraft Foods in some shape or form. A lot of processed foods, but hey, that's why they're there. Because we may have a food shortage, we may have something that happens. Not trying to scare anybody, but who knows what's going to happen. They've been around since 1909. I believe they'll eventually make their way back up and or stay stable. As long as they're paying me a dividend yield for right now, and they've been around for a long time, they're going to do okay, I think. Conagra, CAG. Look at the 5-year plan. 5-year plan, you can see they're actually doing an upward trend. Come over here, we look down here, and we look at 1919, which founded in 1919. They have a dividend yield of 3.433, and Conagra Brands engages in manufacturing of sales, processed, and packaged foods, operates through following segments: groceries and snacks, those type of things. Coca-Cola. For those that don't know Coca-Cola is doing very well from 5 years ago, and I still believe they're going to expand out. Soda company, gas stations, fast food. Who doesn't know about Coca-Cola products? Been around since 1886. There are people probably who don't know about Coca-Cola products. Third world countries or other places maybe have never met or had a Coca-Cola product, but they've been around for a long time, and they're a pretty big, huge global company all around. And I believe they're going to keep pushing up. This is one of my more safer ones, or the 2.7, that I still think is going to keep going. They've been around for over 100 years, and they're going to keep going for even longer. So we'll see how the Coca-Cola does. Campbell Soup. Just think of the song Campbell's Chicken Noodle Soup. Possibilities. Anyways, come over here and you look at this, and you have Campbell Soup. Company engages in business manufacturing. They've been around also for 100 some odd years, 1869. And the dividend yield is 2.7. Another one of my more safer ones. I believe in Campbell Soup because I also use their Campbell Soup products and eat them, store them for food storage. They're going to be around for a while, I still think. Not going anywhere. Verizon, cell phone company. Been around for 5 years. 5 years, you can see they're trending down. People are going to other different companies. Other companies are offering other things. So there's a lot of different things that are happening with that. They've been around since 1983, but they have a 6.895 dividend yield. I still think Verizon's going to be around for a while. One of the more solid phone companies. Maybe not. I don't have Verizon, but I'm investing in Verizon. So I think they're still going to be around. I think they're a solid, good company. So we'll see what happens. Seagate Technology. Now, I believe in Western Digital, but Western Digital doesn't pay a dividend when I did my research. I made a video about Seagate. Seagate Technology is, when you think of tech, you think of computers, they do hard drives and other type of things. So solid state drives and other type of things for computers. They've been around since 2012. And they have a 4.925 dividend yield. I invest in technology. I love technology. Something I have a passion for. We'll see how they go. If Western Digital had a dividend, I'd probably invest in Western Digital. But they don't have a dividend stock. So I'm not investing in Western Digital at the current moment of time because I'm only investing in dividend stocks in this particular portfolio. HPQ. Computer-like company in that sense. You come over here and you look at, and they're doing, not bad. If you don't know what HP is in that particular sense, and you go and you work for a business or company, a lot of companies buy HP computers. Some companies buy Macs. But a lot of companies, if I even look at my computer right now, my work computer, it's an HP computer. So 3.4, invest in what people are using and what people are seeing. Now, personally, when I was a kid, every single HP computer that I ever had for a business, where my mom was running a business, broke. So I didn't have a patch for HP, but they're still around and businesses are still using them. And even now, the computers that the computer gave me, they still break. I, I, I don't know what the quality with HP is that particular sense, but if everybody's using it, keep using it in that sense. I mean, they're good computers for a while, but they don't have that lasting power like some other computers like Macs and other things. So well, I should be investing in Mac in that sense. I just haven't reinvested my portfolio to do something like that. Cisco systems, WebEx, Cisco phone systems. A lot of businesses use that, so I'm investing in it as well, seeing how that's going. Come over here and look at this, and you can see they've been around since 1984, and they have a 3.3 dividend yield. And you know they're around. They're going around all over the place. So I think WebEx and Cisco are going to keep going in that sense. UAN. Now I hit on UAN back before, and I talked about it a lot. This is natural gas and fertilizer for growing crops, growing food, and that type of things. And they're way, way up. And they're even way up for a 5-year plan. And they're still going pretty well. They've been only founded in 2007, but their dividend yield is huge. I even talked about that as well. 24.172. Maybe it's risky, but to me, with that high of a dividend yield and they're doing this well, and they may just keep doing even better during this recession, just more money in your pocket in that particular sense. I talk more about UAN and some of my other videos, so but you can look them up in that particular sense. UAN doing well. I still think they're going to do well, especially during a recession in that sense, and I still think they're going to pay out a decent amount. IP, International Paper. Look at the 5-year plan. You can see right here they're actually going on a downward trend. We come look over here, and we can see in 1898 was when founded, and they have a 5.724 dividend yield. International Paper CO engages in manufacturing of paper, packaging, products. All schools, all places use paper. Lawyers, if you're trying to become FDA or ISO certified, they use paper. Paper is used all over, through law, through legal, through everything. Is paper going to go away? Maybe in the digital world. Maybe it's going to eventually take over, but paper still has its uses in many ways, and I still think they're still going to make paper. And if you look at money still made paper, but who knows, with the new central bank digital currency coming out, maybe paper will not be used as much, but we will see. Paper still has its uses, and I still believe paper will have its uses, so we'll see what happens. Stanley Black and Decker, SWK. They're like a compliance type of company that, you know, engages in provisions of power and hand tools, those type of things. If you've ever had a Black and Decker tool, honestly, personally, I believe in a whole bunch of other more different type of power tools, but I'm doing this one. It's 1843, has a 3.73 dividend yield. We'll see how Black and Decker does. I still have Black and Decker compliances, not their power tools, but you know, maybe I'll have some more Black and Decker. I've used all different type of power tools as an electrician, so you know, we'll see what happens. But I'm investing in it as is for the money, for the dividend yield. See how it goes. NEM, New Mount. Look at the 5-year plan. They're in an upward trend for 5 years. New Mount Corp is a gold producer, engages in exploration and acquisition of gold properties, containers, copper, silver, and lead. They have a 4.266 dividend yield. Gold is very important. If you look at your cell phones, gold helps to produce electricity and have that quicker connection. So they put a little tiny bit of gold in each one of your cell phones. If you didn't know that, that's why they ask you to recycle them and put them back. And there's a bunch of other very precious metals and materials that are in phones or other devices. So gold is not just gold for its, you know, shiny, heavy weight. Gold has a lot of very important uses, as well as copper, silver, lead, and zinc for different type of materials, combine it together to make steel or other type of things. So if you don't know about chemistry and merging metals together, it's maybe something you should look up, because metals and other type of things are going to be something that's lasting for many more decades and centuries to come. I believe we'll see what happens. MPW, Medical Property Trusts. Come here and look at the 5-year plan. They are actually in a downward state. MPW was formed in 2003. They have a 13.942 dividend yield right now. It is a trust and financial one, and so it's, you know, doing that well. We have PFE, Pfizer. We come over here and we look at the 5-year plan. If you don't know the name Pfizer and you had this COVID, then, or you heard about COVID, Pfizer is a medical company. And that particular medical company helps to produce drugs and other things to help combat diseases, viruses, and other type of things. So Pfizer's been around for a while. Come over here and look at ABBV. ABBV, we look at the 5-year plan, and they are actually in an upward trend for 5 years ago. ABV is a research-based biopharmaceutical company which engages in the development of sale of pharmaceutical products. They've been around since 2011, and they have a 3.812 dividend yield. I think they're going to be around for even longer. A lot of different health ones and health products are going to be around, and they keep going, and they're still doing pretty well. So we'll see what happens. Iron Mountain, IRM. Look at the 5-year plan. You can also see they're in more an upward trend. Come down here. They've been around since 1951. They have a 4.52% dividend yield. Iron Mountain Incorporated engages in the provision of storage and information and management solutions. It operates through the following business segments. And you can read through the rest, pause the video, and go through it as you like. EFC. I also mentioned this one. EFC is one of those where they pay every single month. These are the ones that are in a different category at the bottom. I believe EFC is a financial one. And it's more here at the top one, the first one, because it has a much higher dividend yield, 5.88 dividend yield. But they do pay every single month. Ellington Financial Incorporated engages in provisions of investment services. And you can pause and read through the rest as you so please. This one pays every month. And the next ones also will pay every month. Good, Gladstone Commercial. You can see right here, it's more on a downward trend. Maybe it's going to keep going down. Maybe I have to rebalance it. We'll check and see as the year goes. Plan to at least invest in a year. $1 a day, $365. Not a big deal. We'll see what happens in a year. But they also pay a 12.189 dividend yield. They are still paying me dividends. I don't see a reason to stop investing in something that's paying me dividends as of right now. We'll see what happens. We'll just keep going. SLG, another financial one, which pays every single month. You can see right here, it's in a downward trend. SLG, we come over here, we look at, it's been founded in 1997. They pay a 16.0858 dividend yield, and it's another financial one, but it pays every single month. Gain, look at the 5-year plan. They are in an upward state from where they were 5 years ago. Don't have that much worth as it is, but I own a decent amount of it now. And Gladstone Investments, it was a financial one, but they have a 6.858, and they were founded in 2005. And they're paying me dividends every single month, so why not invest in it? SLRC, that's another one that pays out every single month. And you can see here, it's actually trending in a downward state, so we'll have to look at it in the year end, see if we want to rebalance and change. They pay 11.606 dividend yield, and they are another investment one. They pay out every single month. And then, let me swipe to the right. SLRC, is that the last one? I didn't get to, and Maine. Okay, the last two right here. I have Maine. Main Street Capital. Come over here and look at the 5-year plan. 5-year plan, you can see right here, it is doing better in that particular sense since 5 years ago. Come over here and look, they were founded in 2007. They have a 6.529 dividend yield, and they are another investment one. They pay me out every single month. And then we have Reality real estate investment one. Financially, you can see here 5 years ago. They are trending upwards for 5 years ago, and they've been founded in 1969, and they pay a 4.866 dividend yield. So those are all my stocks, and going through all of them. Come over here, and we just want to look at history. We'll look at the dividend payments. Wrap this video up. You can see right here on the dividend payments, we're already getting paid for the month of May. April statement hasn't come out yet, but when it does, I will show you my statement for April. Didn't get as many payments as March. I believe the end of the year, because now that I talked to or read The dividend payments for the months, like the ending months, pay out more than in the middle months. April didn't pay out that not bad. You can see all the different ones that I mentioned for month ones are paying out, like Maine, O, SLG, EFC, Good. Those ones are paying in gain. They're paying me out every single month. And they pay me out the month before as well. So all of these dividend payments are being paid, have already been paid, and have already been reinvested. And now the month of May is coming, and we'll see how they go. If you enjoyed this content, please feel free to leave me a comment. Tell me what you like, what you didn't like. Smash the like button. Don't forget to subscribe if you want to actually get notified weekly on my new voice posted videos. If you don't want to get notified, you don't have to subscribe. Come back once a week, come back once a month. Just check to see how it's doing. That's totally fine with me as well. Thank you for being here. Thank you for staying here if you've watched this all the way to this point. You all have a wonderful rest of your day, and we'll catch you all in the next video.